In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I highly encourage you to double check the latest videos on my channel so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. Mind you, yesterday's calls were pretty much spot on for what today's play was, but I'm going to cover the latest update. But first, Thursday, August 8th, 2024, at 8:30 a.m., we have initial jobless claims. At 10 a.m., we have wholesale inventories. And at 3 p.m., we have Richmond Fed President Tom Barkin speaks. And in terms of the markets, again, like I said, it happened basically just play-by-play from yesterday's calls. The only but the missed call I would say is the Dow Jones is expecting to drop down to this upward trend support level. Didn't necessarily quite get there, but called the upside, called the downside, so on and so forth. I'm going to go over the S&P first. I'm going to go through the SPY, which is an ETF of the S&P 500, just essentially just a different ratio. And so we ended up actually going up to this level, like I stated, and then coming down. The potential play was to potentially pass that level because pre-markets and futures was a decent amount higher up, but it didn't actually even break through the first level to begin with, and then ended up coming down to the support level that I mentioned. Now the question is, what is the play from here on out? Based off the MAC lines, they indicate, by the way, bearish or bullish movement. So for example, here's the MAC line in case you're new to the channel. And right now it is in the bearish territory, so technically indicating further downside. And I will say the longer term and some of the shorter term is indicating further downside. So further downside is to come if you follow the MACD lines. And in terms of not necessarily the short term, but I would say the first trading hour, there's a chance, first trading hour about 2 trading hours, give or take, when the opening bell happens, there's a chance the markets might be slightly up. But regardless, even if they do go slightly up, they're going to still get pulled down by midday to towards the end of the trading day as well. So now if we were to go up with the SPY, by the way, we closed at $518.66. And if we were to go up, I'm expecting max case scenario basically to go up to this moving average about $522 and some change. And that kind of coincides with horizontal somewhat resistance of 522. We could even spike up to 524, 525 because of this zone right about here, give or take, collides with this within this zone. But there's a chance that we might not even pass the 522 because it collides with the moving average and horizontal resistance at the same time. So that would be the high point of the early part of the day. And then towards the end of the trading day, basically start heading down. Now, I showed this from yesterday. What I'm expecting us to go is down to this zone. The significance of it is there's horizontal resistance and support level at this level, plus with the moving average of the 1-year chart, which is at $500 to $499. $499. Now that $499, in my opinion, will get broken and we'll start heading down to the $493 that we've seen multiple times in the past, act as support right across about here and here. So, but essentially first get to the 500. Will we bounce? There's a potential we will bounce on the 500, but we have to assess it when we get there. But essentially my first target of heading down is to the $500 price point range, $500 and $499. And that's essentially what's going to happen. Will we meet that tomorrow? I don't think so. That would be quite a big of a drop. I think it's going to be in the next few trading days, essentially. But again, if we do start for some reason going up to the upside dramatically for the S&P 500, I expect this upward trend resistance lines to still hold true, which is about 531 and some change, plus the moving average by the time we get there is actually, in my opinion, will pretty much guaranteed knock us down, especially since the MAC lines are pointing to the downside. Now for the Nasdaq, which I'm going to be looking at, ETF QQQ, again, same thing happened. Went up to the upside, actually ended up getting stopped by the first resistance level that I was expecting. There was potentially the second levels, but now the markets was not that optimistic, I guess, fully, but got pulled down after the first one hitting and came down to the level that I expected, which was about 533 and some change, but we closed at 534 and some change. And if it does pop up to the upside, like I said, the early part of the day, you could expect it to go pretty much around the $440 price point. Maybe if you're too optimistic, $443. But essentially we'll get pulled down. And then if it does get pulled down, it might have support at the $434, give or take, $433 price point range. And one thing I should say for the S&P 500, same thing. If it were to go up to those levels that I mentioned, 522, 524, 525, and comes down, we will see support at 518 and some change as well, give or take. This is for the early part of the day. And basically it's just going to consolidate somewhat support and then ultimately still break through it, because I'm expecting it to break through, in my opinion. Again, this is always just my opinion, so please do your own due diligence and research before buying and selling. Now, once we come back down after the first pop early part of the day, which is not guaranteed, but if we do end up popping in the first part of the day, and then come down. We will see some consolidation support at 513, $433, $434 price point, give or take, and then start ultimately coming down, and then essentially heading down to, like I stated yesterday, to $412. Now, it's not going to happen all tomorrow. I expect this is the exact same thing as the S&P 500. The next few trading days ultimately start heading down. We'll have support levels on the way down, obviously, and then up days, give or take. So, for example, we could drop down to $421 because I could see some decent horizontal support levels at $420 essentially. So we could drop down, and actually the previous drop you can see right about here when we had the Japanese market drop quite a bit. So 420 seems like it will actually be a decent support, which I did mention yesterday too. So 420 I could see us coming down to, and then probably going back up to the 428, give or take, and then ultimately coming back down to 420, consolidating, and then dropping down at some point to the $413 price point range, give or take. The way I'm getting these levels is just based off support and resistance and so on and so forth. For example, right about here, this essentially has more than one touch point, but this is just more zoomed out version. We have support level right about here, resistance level right about here, and support level right about here. It has more than just two touch points, by the way. Again, if you zoom in, there's more touch points, so on and so forth. But those are the levels I'm expecting. And then if we do go up to the upside, if for some reason dramatically to the upside and the market's pretty confident, the highest I'm expecting is pretty much about the $447, $448 and some change, give or take. Today we hit, $448 and some change. Plus the moving average, by the time we hit it, it's pretty much going to, in my opinion, guaranteed to knock us down, just like the S&P, because the MACD lines ultimately are pointing to the downside, with the resistance levels being hard to pass, like we saw pretty much today for the most part. So $448 and some change, moving average, so on and so forth, that'll be the highest, and then we would get knocked down ultimately, in my opinion. And then the support levels, like I mentioned, would pretty much cause issues to break down further a little bit, but ultimately coming down, in my opinion. Now for the Dow Jones, slightly different a little bit. Essentially same thing, it's coming down. The only thing is, though, I would say that's different is instead of going up early part of the day, there's a chance it could go up early part of the day, but essentially all the MACD lines are indicating just further downside instead of just a small pop to the upside. Will it be true? It's hard to tell fully, but in case, well, first of all, if we do drop down, because that's the narrative that the MACD lines are showing, mind you, we closed at 38,763 points. And if we were to come down, I'm expecting this upward trend support level to somewhat hold us. We've seen multiple times. This dates back since April of 2024, multiple touch points. Obviously, it's holding true. In my opinion, I think we're going to break it because all the MACD lines are showing downside for the most part in terms of short-term, long-term, and all that stuff. And it will be support at roughly, give or take, about 38,550 points, give or take. We'll probably bounce off a little bit and then go up and then come down, but essentially coming down to this upward trend support level dating back since 2021. There was multiple touch points as support back in 2021. And let me just zoom in a little bit closer. So basically, if we were to drop down, say tomorrow, it's trading day, it's not necessarily guaranteed, but in case if it does happen, essentially somewhat coming down to 37,850 points, give or take. Will there be support on the way? Of course. For example, I could see support at the 38,050 points, give or take, because right about here, this is just going to be a rough horizontal support level drawn. But I could see support, resistance, and support right about here, and I see resistance right there. So pretty much 38,050 points, but I could see a quick drop where it just hits 38,000 anyway. Slight bounce up to the upside maybe, and then maybe not even hit the support level that I mentioned earlier, and then probably hit it the next trading day or something like that. But if we do pop up to the early part of the day, just like the S&P and Nasdaq, which I don't see necessarily happening, but it could happen, then the first level, well, actually, ultimately, for the most part, I think the 6-month moving average will hold true. Like I stated yesterday, it still held true anyway, is if the market was too optimistic, because the MACD lines are pulling down regardless, I don't see us passing the 39,400 to 39,500 price point range. And then if it's not too optimistic and does the same thing as the S&P and Nasdaq that I'm expecting it to do, then it would be on the 39,000 and low range. So 39,100 to 39,200 points price point based off the resistance levels that I mentioned measured earlier, and then start heading down and, like I stated, bounce off the support of essentially 38,500 points, give or take, and then come down further later on in the trading day. But yeah, that's basically it. Hopefully you guys enjoyed the video. Hopefully you guys liked it. If you did find it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. And I do post these videos daily, so I highly encourage you to follow/subscribe so you'll be notified when I upload my next video. And that's basically it. Thanks again for watching. I appreciate it, and God bless. Take care. Peace.